Hello dear students, this is Durga Prasad Nalla. In the previous video, we have learnt about analyze the transactions under traditional approach. Now we are going to learn about analysis of transaction under modern classification. Whatever approach you are following, the business transactions are common. The method or the approach you choose in the presentation is different. The final output will be same for both the approaches. That's why you need not to worry about which approach we should follow. In the examination, if they specify which approach you need to present, then only we have to focus. Then only we write that particular approach. Otherwise, you can make your own choice if they didn't specify in the question about the approach. Either of approaches you can write in the examination. I repeat again, in the question if they didn't specify which approach you need to follow for the analyzing of transactions, you can choose the approach on your best choice. If you feel comfortable with the traditional approach or modern approach, you head. But if they specify, you need to follow the instruction. Let us see the modern classification, how we are going to analyze the transactions. Here, this is the solution we have taken from T.S. Gravel's bookkeeping, double entry bookkeeping 2026 edition, the source. So here we have few transactions. From the transactions, we need to identify or analyze what are the various accounts involved, what is the nature of account, how will be affect, that means increase or decrease, and which is debit and which is credit. In detail we come to know. After this class, you are able to solve on your own in business transaction how many accounts involved, what kind of account it is, how it will be affected. You are able to identify whether it is debit or credit. So let us move to the problem. Here they have given question, the transaction number 1, Dinesh started business with cash. One component is cash, the other one is Dinesh capital. Dinesh is a owner, ourselves. So whatever the amount we brought into the business is considered as capital. As you know, cash is an asset. Capital is an capital. Children, here don't forget, under modern classification we have categories like asset, expense, income, capital, liability. These are the 5 categories we have. When nature of account, we need to identify out of these 5 one category. Here the cash is an asset, capital is a capital. And how it will be affected? When Dinesh brought the cash into the business, it will increases the cash balance of business and the capital also increased. According to rule of modern classification, you can refer the previous video also how modern classification will be. If asset debit credit, if you mark asset increases debit, expense increase also debit. Asset decreases credit, expenses decrease also credit. Vice versa of these items. Debit decrease, decrease, decrease. Credit increase, increase, increase. So now capital increases means credit. Asset increases means debit. I repeat again. If asset got increase, debit, liability or capital or income increases credit. Here it is capital, that's why it increases. Now next transaction, deposited 1 lakh to open a bank account. Here two items included in this, the two accounts included in this, one is bank, another one is cash. Why? Because we can deposit our cash into a bank. Bank balance is an asset and cash also is an asset. Now tell me, if I deposit into a bank, my bank balance will increase or decrease? So increases. At the same time, when I deposit my money into the bank, my cash balance got decrease. Both are asset nature. So we can look into asset point of view only. So if asset increases, you can cross check. If asset increases, you can cross check here. If asset increases, debit. Asset decreases, credit. Asset increases, debit. Asset decreases, credit. You can see that 1 lakh in the debit, 1 lakh in the credit. Next item, received loan of 1 lakh from Naresh by check. So here we have received by check means one component must be bank. Received by check. Received loan of 1 lakh from Naresh by check. The other component is who given loan? Naresh. So we should, whenever we have taken loan from any other party, mention their name along with the loan. Why it is? In coming days we discuss elaborately while doing journal entries chapter. Understand? The other account involved is loan from Naresh. One account is bank, another account is loan from Naresh. So here bank is an asset and loan from Naresh. You tell children, when we received a loan from a party, we owe or they owe to us. Here we taken loan means we owe. That's why it's a liability for us. Now tell me, our bank balance got increased if someone given a loan to us on via bank account. That means our asset got increased. At the same time, we owe to the Naresh. It's a new liability to us. So liability also got increased. So both asset and liability got increased. If asset increases, as you know that it's a debit, and liability increases, it's a credit. Understand? Next. If you want, you can take screenshots of this answer. Purchase furniture for 20,000 in cash. What are the two accounts involved? Say we have purchased furniture. So one account must be furniture and we paid cash, means another account is cash. Now tell me, categorize this. These both are belongs to assets category only. Category means nature of account. So here asset you can see, here also asset. If when we purchase a furniture is coming, so furniture is increased. Cash is going out, so cash is decreased. So as we know that asset increases debit, asset decreases credit. Hope you understand. Similarly, like fourth transaction and fifth transaction, keen observe children. Purchase furniture from Delhi Safe. Delhi Safe means furniture showroom. Name of the furniture showroom, Delhi Safe. So we purchased furniture on credit basis. We purchased furniture on credit basis. From whom we purchased? From Delhi Safe. Delhi Safe is also called as vendor. When asset purchased on credit basis, who sold us? The supplier is called vendor. So here two components are involved, two accounts are involved. One is furniture, the other one is the Delhi Safe, the vendor of our business. Vendor of the business. So furniture as well is an asset. Delhi Safe vendor means it's a liability to us. Now the asset we got newly and the liability also increases. So both it is increased. Our furniture is increased. At the same time, we owe money to the vendor. Delhi Safe also increased. If asset increases, it is debit, and the liability increases, it is credit. Always the increase and decrease or the nature of account or nature of transaction, we always focus on these 5 rules. Modern approach rules, which is going to debit, which is going to credit, is deciding factor is these 5 characteristics. Nature of account. In previously we have learned traditional approach in previous video. Personal account, real account, nominal account, how 3 categories are there. Here we have 5. So which one you feel comfortable, you can follow that one. So now few more transactions are there. Purchased goods for cash. So please identify here fourth transaction and sixth transaction. In the fourth transaction we have purchased furniture, means asset we purchased. Where goods, these goods are part of stock in trade, means business. So whenever we purchase goods, instead of using the words goods, use the word purchases, because it recurring nature, because of recurring nature we use the word purchases. So what are the accounts involved here? Purchase and cash. Purchase means purchase of goods. Hidden meaning, purchase of goods. So you can write purchase only. You can write purchase only. So what are the two uh, accounts involved, purchase and cash, and what are these? Expense and asset. Purchase is an expense. Why? Because it's an expense. Recurring nature. Here furniture we consider as asset because non-recurring nature. Purchase is considered as expense because it's in recurring nature, and as cash is as well asset. So now our expenditure is increased. So increase. Even when we purchase goods, our cash balance is supposed to be decreased. So decreased. Expense increase, debit, and cash means asset decrease, credit. And next, purchase goods from Mahesh. That means they didn't discuss about the cash involvement. If they didn't discuss about the cash involvement, we may assume it's a credit transaction. That means we purchase goods from Mahesh on credit transaction. Mahesh is our creditor. Mahesh is our creditor. So what are the two accounts involved? Purchase of goods and Mahesh means creditor. You understand difference? When I purchase furniture, I called it is a vendor, but when I purchase a goods is called creditor. Means here asset purchased, here goods purchased. The small difference is that. Now purchase is an expense. You can see purchase is an expense. Mahesh creditor is a liability. So both are increases. Both are increases. New liability we owe money to Mahesh. So which the liability will increases. Our expenses also increased. Expense increase debit, liability increase credit. Now eighth transaction. Sold goods to Karim for cash. Two accounts involved is one is cash because we received cash, another one is sales. We ignore Karim name here. We ignore because once we receive cash from Karim is not our debtor because he paid off. So that's why ignore Karim name. Ignore Karim name because he paid already. So cash and sales included. Cash is an asset and sales is an income or revenue. We can say it is revenue or income. So when we sold goods for cash, our asset balance will increase. Revenue also increases. Okay. Asset increases, revenue increases. So asset increases debit and revenue increases credit. Sold goods to Sham on credit. Now Sham will be considered as debtor. Sham will be considered as debtor. So one is Sham, one is sales. Sham will be considered as debtor. When we sold goods to someone on credit basis, he is called as debtor. Debtor means someone owe us. Someone owe us. So Sham is an asset to us because he owes us. It's a receivable amount. He owes. Debtor is an asset and sales is a revenue. Asset increases, revenue increases. Asset increases debit, revenue increases credit. Cash received from Sham, debtor 20,000. So we have received a cash from Sham. You can see cash and Sham account. So we receive cash means asset. Sham also an asset. Why? Because the debtor. So asset got cash is increased. Sham is decreased. You check. Sham is decreased because he paid off. So we reduce his amount by 20,000. He owes 30,000 in the previous transaction. You can see he owes 30,000. Now he paid off 20,000. So the asset got decreased means the Sham who owe us earlier it is 30,000. Once he paid 20,000, he owes 10,000. That means 30,000 to 10,000, 20,000 is decreased. So we can say asset got decrease. If asset increases debit, asset decreases credit. Cash paid to Mahesh. We purchase goods from Mahesh in the seventh transaction. You can cross check, that is 30,000. Now part payment we are paying 10,000. So here one is Mahesh, one is cash involved. Mahesh is a liability to us and cash is an asset to us. Now we are paying means our liability got decreased. We owe earlier in the seventh transaction 30,000. Now we are paying 10,000 to him. That means next we owe him only 20,000, means our liability got decreased. And asset cash paid to asset also decreased. So liability decreased debit, asset decreased credit. So this is the way we solve the problem. For better understanding, repeat the video multiple times. If possible, share to your friends also. Okay, so hope you understand the traditional approach in the previous video and the modern classification in the current video. Careful observe, these are the basics for your journal entries. If you understand this properly, your journal entries will be easy. Chalo, okay. All the best, children. Thank you.